and welcome to this video from CryptoML. Today we'll talk about CryptoML price channels, which are designed to identify statistically likely ranges of future Bitcoin price movement. Combined with our market index, these channels help crypto investors focus on the long-term, big picture, which goes a long way to reducing your stress and helping you make better decisions. All right, before we get started, I want to note the tools you'll see here are all part of our free membership. Okay, let's hop on in and take a look. All right, so here are the CryptoML price channels and what they look like. And as you can see, this is a nice set of curved lines. What these really are regression curves that provide this pretty amazingly simple structure to what you could say is like a decade of really volatile Bitcoin price action. But you can see how simple this looks compared to what it maybe feels like in the crypto markets. But these are very powerful, so let's take a look at these different channels. The blue, of course, is the Bitcoin price as it's moving around to where we are currently at about almost 39,000. And then you have these channels here above and below. So the green channels, these are usually the value zones, or this is the good time to invest in Bitcoin if you believe in it long term. On the other hand, you have the red channels, which is this top zone here. And within the red, it's sort of the opposite. This is when you need to be cautious of the market. This is when things are getting overheated and you should really consider taking some profits. Now, we want to talk about exceeding this model. Even though this model has held up extremely well for this long, there is a point here where the model exceeded. So where price actually broke out and then it popped right back in. So as you can imagine, what the event was something very extreme. And in fact, this is March of 2020. This is when Bitcoin crashed due to COVID. This was obviously an extreme time, and most markets, including like any traditional investment, crashed at that time as well. What this shows is you can have extreme global conditions cause this model to break down. Now, it is possible that at some point price will break out of this model. It could be above or below, but let's say it eventually breaks out of this model and it looks like this model has been invalidated. So this model is no longer going to work. And what it would really take for that to happen is something fundamental about Bitcoin would need to change, where its long-term value proposition is different and it's no longer working. So you no longer see this upward track happening. So we have not seen that yet, but there is the possibility this model will break down at some point in the future. All right, so one way we can use this model is to identify where Bitcoin may bottom out. For example, we're in this green channel, and I know if I look at this, if I bought any time in this green channel, I'd be in pretty good position. So that may be a time I just generally invest a little more than normal, is when Bitcoin's tracking in green. But I could say we may not be bottomed out yet. So we're at about 39K. I can look at this and say, where will Bitcoin go in a worst case situation? So what this gives you is a bottom of 29,000. And that would say, as long as the statistical model continues to track, this is a good estimate of where the market may bottom out. It doesn't necessarily mean we'll go there. And no tool is perfectly predictive, but this does give you good information about where you may see prices come if things continue to track downward, if we continue to see this bear market go. All right. So we've talked a lot about these channels, how you can use them, and really this is designed to be used alongside the market index. So we'll look at all this data you can get on the market index. This is the Bitcoin graph, and then come down here. This chart is a just statistical model using only price as an input. The market index, on the other hand, uses a ton of data to try to measure and quantify the overall Bitcoin market sentiment. So it's looking at many, many data points to do that. So what it does not really help you with, it does tell you when we're in like extreme conditions. So it tells you when a reversal may be likely, but it doesn't really help you with what a bottom or a top might be, or where you might see resistance. So that's where you can say, hey, I see, as an example, the market index is telling me there's extreme fear in the market. It may be a good time to buy, but I might want to then come down here and look and say, well, where are we? We may be in extreme fear right now, but it looks like we still have a ways to go. Maybe I want to invest some now, but kind of hold some back and invest a little in the future. So it lets you build that bigger picture by using these two together. Okay, I can talk now about a little bit about how these are generated. So what you'll notice is most Bitcoin price charts don't look like this. The reason is, first, this time axis is on a weekly basis, and the other one is the y-axis is on a log basis. That's logarithmic numbers. And what that does, combining those two, it smooths out the action a little bit, and you get this nice bigger picture view of how the markets move. When we represent the data in this way, we can then come back and do some regression analysis. We can let some, basically some equations train themselves to do a best fit line. And really what's amazing about this is how smooth those lines are and how clear they are. They're coming together, so they're a little wider down here. This arc is flattening out, coming together, and you can just imagine this stretching off into the future. As long as Bitcoin continues to track in the way it has, it'll bounce between these and move off into the future. It really provides an excellent model for how Bitcoin has moved over time. All right, and last up, we do have some tools here for advanced users. So this is true of the market index. We have this little hamburger icon, and also for the price channel. So you can click on this and download the data. So you can download it in Excel or a CSV. This will pull all the data points you see in this chart, including every single plot from the channels, the price, and how that's changed over time. So you can download that data and do your own analysis. I know a lot of people like to do that and really understand what's happening behind the scenes. If I visually want to process this data, I can also do that by clicking and dragging or zooming in. So I'll just click here, zoom in on a space, and I can actually see in a little better detail what happened. If I want to zone in on this COVID exception, I can come in here and I can see, hey, there's that green channel, and how much did we actually dip and how long did that last before we popped right back in and stayed in the channel. So you have these zoom along with pan capabilities with this graph. All right, thanks for watching this video on the CryptoML price channels. Please share your thoughts in the comments below and be sure to subscribe to our channel. And as always, head out to crypto-ml.com. You'll find a ton of great resources that will help make you a better crypto investor.